Hello, trading has closed on October 19th, 2021. In accordance with our custom, we'll start with our disclaimer. This is my trading plan for tomorrow, Wednesday, the 20th of October, 2021. Just remember, I can be completely wrong, and any trade you make should be at your own risk. Before we get into my calls, I want to tell you that last night I tried to get a video with Norm Winsky, and I had nothing but one software problem after the other. I have one program for making the video, one program for communicating with him, and I couldn't get both of them to work at the same time. Now, he did send me his notes. It was very kind of him. These are his change in trend dates for different commodities. Remember, if he sees a rally into the date, he looks for a drop. If he sees a big drop into the date, he looks for a rally. And if there's no clear trend into the day, there's no signal. Now, any one of these, and the last 2 weeks, he was right 86% of the time. So it's nothing to sneeze at. Now, any one of these dates also works for stocks. And it's important to notice that today, after the close, AC is after the close. And tomorrow morning, October 20th, AM is always morning. That's one of his change in trend dates. So based on a methodology having nothing whatsoever to do what I do, he has a possible change in trend overnight. Anyone who wants to learn about his stuff can contact him here. He's offering a free lesson, free, to the first 5 people who contact him. Here's his telephone, 239-594-3939. His Skype is nwinsky_1. His email is nwinsky@bark.com. So we have the stars saying this might be a high here. Let's look at some other things. We look for the pattern with the early low, and tomorrow also has the early low. This is a pattern, tends to rally with a high in the final hour. We certainly got that. The catch is, with very little time left to trade, we gapped up, hit all these higher highs, and we're under all these highs and even under some of the lows. Rallying in the last few minutes of the day does not represent purchases by institutions. So as far as I view this is a negative pattern which can be invalidated by tomorrow's open. So if tomorrow's open quickly clears these highs, all is forgiven. If not, the failure to follow through on a normally bullish pattern should lead to lower prices tomorrow, even if we don't close lower. It's a reason to be cautious. Here was the MEJT calls from today. This flip up was said to be false, we retrace. This drop was said to be false, we retrace. Ultimately, a higher price should print, and ultimately it did. Now, eventually, I'm going to probably have to get rid of this count. I'm fully aware C waves are often related with the Fibonacci ratio to A waves, but 0.236 isn't one of our favorite ratios. But this could be just A of C. You don't know at this point, and it hasn't really been killed yet. So until something better comes along, I'll leave my parentheses and I'll keep this. Right now, we have a major trend line here, and we've had a straight line move up to it. And the rule for that is either you gap over the trend line or the trend line wins. And by the trend line winning, I mean either you start straight down, or if you move over it without gapping, you retrace to the line. That's one more reason to be cautious at tomorrow, and one more reason to say if we gap up over this, all is forgiven, the negativity goes away. Rally can continue. Well, this doesn't have to be the only count, but I'll use it if something else comes along. If that's A and that's B, wave C right now has a Fibonacci relationship to wave A. You've also got a clear 5 waves up, and wave 5 is half exactly of waves 1 through 3 inclusive. And if you look at the prior consolidation, this high is a fib target of the prior consolidation. So you got a lot of Fibonacci resistance right here in addition to everything else. Now this doesn't have to be wave C. I'm looking for higher prices and new all-time highs. It could just as easily be A of C. It could be 1 of C. We could go much higher. But at least it's a logical point for the strong up move to pause. And once again, if we gap up over these highs, the idea is killed. Wednesday's pattern has the early low. We could still gap up. We gapped up, hit a higher high with under 10 minutes left to trade. We're under prior intraday highs. The break over them didn't come at the time. Institutions tend to enter trades. So it needs confirmation at tomorrow's open if it's a valid move up. If we don't gap and promptly overtake today's high, I look for lower prices to print tomorrow, even if we don't close lower. You've got Fibonacci and trendline resistance at today's high, the wave count, the timing. All these are compatible with a pause, and all these go away if we gap up smartly. If we don't gap over today's high, lower prices should print. But that doesn't mean we have to close lower. The rally over last week's low should have further to go, but we're not obligated to go higher in a straight line. And so far we've had a straight line right up to resistance and price and time. So we'll look for tomorrow's open. If we don't gap up here, I look for lower prices. It's a pattern with the early low, and that's today's call.